the Nifty, but it's been fairly quiet and fairly range-bound is what we've been tracking on the benchmark indices. Remember, you're somewhere also in that little bit of a resistance area. The put-call ratio yesterday also was giving you a sense that the upside could somewhat, be a little bit on the limited side. But at 84.45, it's going to be interesting to see how the markets take it forward from here. So let's try and decode that with Rajat Kohli of India Nivesh Security and Rajat Sharma of Sana Securities also joining in today. Rajat, first over to you. What's happening as far as the markets are concerned here? How are you reading it?
Good afternoon, Priyank. I think market is as confused as I am. So that is why you are seeing this kind of tepid response throughout the day. A very small range of within which market is moving. I guess, but I must say that it is very mature reaction also, because we didn't see that kind of panic which people were expecting if once Greece defaults. I think it has more to do with the fact that most of it was already known and it is only a technical default now, but practically we all know that this country has already defaulted. So I guess the market is waiting till Monday when the referendum results are out. Sunday they will be out, so Monday we'll react on that. I think more or less it is factored in that if we get a referendum on yes, that means if Greece people decide they want to stay in Euro, probably we'll again move into the positive territory, and everywhere things will be again, there will be hope that it will be sorted out. And if they say no, then probably we'll see a bit of negative reaction, and then we'll wait whether this is the same kind of situation will prevail into other European nations like Portugal or Italy or any other country which are also just watching like we are all watching. So I think there is a lot of news flow to be seen in the next 2-3 days. That is the reason why markets will remain very range bound. Monday will be the day when we'll see some clarity on that.
All right, clearly it's uncertainty. It's probably a no-trade zone as well. Rajat, what's your reading when we talk about markets right now? Are you how are you reading the benchmarks? And are these good times to actually go ahead and probably pick up, or you're avoiding the market right now?
Good afternoon, Priyank. Well, we've been cautious on the markets since the beginning of this year, and I don't think anything has changed so substantially for us to take a call on that. I think on 28,000 at Sensex, that's right now. I think it's trading at what, 22.3 in terms of valuations, and Nifty is a tad bit higher than that, and that's like as expensive as it's been in the last 10-12 years. Now there is hope that corporate earnings will improve, but let's say even if they improve 15% or 20%, which is saying a lot, I don't think they're going to improve about anything over 12 to 15%. Even if they were to improve about 15%, then at 28,000 level, that brings us to a valuation of about 20, and even that looks a little expensive. So I think right now the only positive I see is that there is nothing so bad about the economy that there could be a crackdown or there could be a sell-off in the markets. I mean, I know we've been talking about Greece for a very long time now, but personally, I think the fact that Greece is not doing so well, it has been known to the markets for a fairly long time. And I think 4 years, I mean, Greece has been defaulting since what, 2010? And it's happened so many times now. We've played the story out so many times that I don't think any central banks or any big banks, for that matter, would have exposure of the kind that would cause any severe setback to them. In fact, I don't know why nobody's talking about this. I think the fact that Greece is not doing very well, and if Greece defaults, the focus again shifts back to a lot of the other European nations. There's Ireland, there's Portugal, there's Spain. Cyprus had really high interest rates until some time back. I think if all these countries get back in focus and investors start getting wary of these countries, some bit of fund outflow that happens, India, where it is right now with all its manufacturing drive and Prime Minister's Make in India initiative, this could actually be a great opportunity for India for a 5 to 7, 8 year perspective, where a lot of these funds, when they flow out of the European nations, could flow to emerging markets, particularly India, because our story has been that we're creating these long-term assets, and that's where you should invest. So I think long-term, this could be a positive news for India.
Since you brought
but
up
again, I mean, if you talk about it from
I just want to go back to that point, Rajat, that you actually made in regard to earnings. If that's still looking like a little bit of a tough catch as far as where expectations are and where valuations are, Q1's expected to be another subdued quarter?
Well, let's see. We're just a week away from earnings, but personally, I think even if earnings were to improve substantially from here, it's not like Nifty or it's not like stocks would suddenly become very cheap. Either stock prices have to correct from here, or earnings have to increase in a big. Now, I don't say that it's not possible. I don't think earnings cannot improve in a big way from here. But then it's too early to say that earnings would increase by more than 15%, 18%, and that's what really we're looking at for these valuations to be justified. So I would probably be cautious for the next 6, 8 months, 10 months. Again, that does not mean that you're not going to invest. I think if you systematically keep investing in good, high-quality stocks, there are sectors where there is enough opportunity to buy. There's a couple of sectors we're looking at. Of course, when economy is coming back and things are looking nice the way they are right now, short of valuation otherwise, there's, of course, financial services where you could invest. There are financial services other than banking, because I think right now with rich valuations, a lot of the financial services in terms of investment banking and M&A activity will pick up, and brokerage would pick up. So we're looking at stocks where there could be a dual play with banking and with financial services. You can invest in most of the private sector banks even now at these valuations. There's Axis Bank, HDFC Bank. I think Kotak Mahindra looks very interesting because they have about 54% of their revenue coming in from non-funded streams. So they already have a market-leading position in terms of service income. So these are some of the things where we could invest. The other sector where we're quite bullish is healthcare. Sometime back there was an increase in the FDI cap, and I think if more and more Indians get insurance, I think that would be a very big plus for healthcare services, hospitals. We're looking at this company, Max India, which is obviously going to split 3 different business verticals.
Rajat, let me come back to you with some of those picks in detail as well. But now I want to get another market comment going with Gaurav as well. Gaurav, since we're just getting a roundup of the market direction, because today it's been a pretty narrow range that the markets have been trading in. Let's get your comment going first in regard to the market strategy, and then we'll move to individual stocks. Gaurav.
Good afternoon. The couple of days have been quite a dream run for the Nifty, and a lot many stocks, mid-caps have been performing. There has been a small correction that you can say in the large-cap names today, but overall it's been a dream run, no complaints whatsoever. The Nifty's current level, I would say just wait and watch for today, just for the next 10 minutes. The reason being that for major part of the day we were trading with gains, but now that towards the end we have seen a good amount of fall from the higher levels. The difference of cash and futures that has gone down. So I feel there might be some of long unwinding that can be seen. In last couple of trading sessions, we had seen a decent amount of long positions getting built. So it might be at the end of the day, we might see data that shows that there was some amount of long unwinding. If that so happens, I would wait and watch out for the levels. 8450 still remains a very important still remains a very important fort to conquer. We have been trading above this level for a major part of the day, but towards the end, I'm seeing it's around 8430, 8435. So that's not a positive sign. So how it pans out tomorrow morning, I would place my trades based on that rather than towards the closing. Stock specific action cannot be ruled out, but for Nifty, I would wait for at least a day.
All right, so that's as far as the market commentary is concerned and what we're tracking right now. Let's talk about some of the newsmakers today and that have been in focus. The auto pack, Tata Motors is down 2%, but you've got some of the other active ones. Bajaj and M&M have been showing some good strength. Daljit, any of these auto guys and your read-through from the monthly sales numbers that we've been tracking over the last, 24 to 48 hours?
Yes, Priyank, we have a buy rating on this thing, what you call Bajaj Auto, with a target of I think around 2700 or so. We picked it at around 2000, so from there it has already given good move. Although there were a lot of concerns that monsoons, because of poor monsoon expectation, numbers may not be good. While domestic market sales are not so good even now, but exports have already started picking up, and that is, I think, compensating more than for what has been lost in the domestic market. I think from here probably upside is not too much there, so we'll have to bring it down to hold rating or something. But we like Bajaj Auto. Mahindra and Mahindra, this time after many months, we have seen tractor sales actually rebounding a bit. So which means that, and their new utility vehicles which they have launched, they have also gained good traction. So I guess from here onwards, Mahindra and Mahindra will score over others in terms of priority, if you want to, within the sector. So we will have as of now, a target of only 1280 on that. Stock price is already near that, but I think this target price will be revised upward. So positive view on Mahindra and Mahindra. Tata Motors is now valuation wise becoming attractive. All that froth because of hype on Evoque and China and all that, I think, has now gone. At 440, it is becoming reasonable to enter into the stock now. So we might be very soon coming out with an IC on Tata Motors. We have a positive view on that also. Hero Honda is on the hold rating. Again, there is target is around 2700. That's purely because of valuation.
Fair enough. And since we're getting a mention on the auto pack, Rajat, you spoke about the pharma space, a couple of the counters that you're working with in the pharma sector, but anything from the auto pack that you like right now that you would advise clients to look at?
Now, overall, I think the auto space looks expensive in general. I think there's still an overhang of oversupply in the inventory space. We'd be looking at infrastructure space first. I mean, infra projects have to pick up before auto sales could do well in a meaningful way. Tata Motors, I agree, looks attractive at these levels, but again, as I said, with slowdown in the European markets, plus infrastructure projects not doing as one would have hoped about a year back, I don't see any significant pickup in auto space right now.
All right, Rajat, so then let's get some final thoughts going here. One stock, you spoke about Max India. Beyond that, is there one stock that investors should probably have in their portfolio right now, Rajat?
Yeah, I think from the banking space, you could buy actually any of the private sector banks, but Kotak Mahindra in particular looks really attractive right now. That's what we're recommending investors. The other thing that I would like to mention here is that why I say that valuations are looking overstretched is because there's a flurry of new IPOs hitting the market. And I think once that starts happening, there's going to be new stories and new names coming out. Some of the money from the blue chips in the current scenario will probably move out and find way to the new issues that hit the market. And yes, a lot of the money lying on the sidelines may come into the market, but a lot of these automobile stocks and even I heard about fertilizers this morning, all of these are looking slightly either beaten down stories or overvalued stocks. So we're not as excited about these sectors as we were about a year back.
All right, fair, Rajat. Hold that thought. Let me just quickly mention some of the broader market counters that have been buzzing in trade today. Vakrangi's up 10, Finolex Industries, Shipping Corp. We're talking about the Baltic Dry Index. In fact, SCI, I believe, is around the day's highest point, is what we've been tracking. RCF, Rajat was talking about the fertilizer space. Religa is up 5.3. TVS on the back of those monthly sales numbers. Cox and King seems to be recovering as the overhang on Greece seems to somewhat ease and its exposure to Europe. So that's one on a little bit of a recovery today. Central Bank of India is down 2 to 3%. HT Media seeing a cut. IGL, after yesterday's huge move, is somewhat cooling. And Unitech continues to struggle with a 2% cut, is what we're tracking. Daljit, you're the one who actually keeps a close watch out on the mid-cap space. Any of these guys on your radar or any new stocks that you've managed to take under your coverage?
Priyank, none of these guys are under our coverage, so we'll avoid that.
Okay.
Now, any other stock that you mentioned, I think we have reiterated a buy on Torrent Pharma, and we have increased the target substantially there. Now it is, I think, around 1600 odd. So Torrent Pharma, because of the large pipeline of products and that US business doing very well, it is now growing at a very fast pace, much better than what we had earlier expected, especially after the approval of Abilify, that aripiprazole, which they got a few days back. Within first month of launch, they have got 10%, more than 10% market share. So that will add to their numbers substantially. And in the same product, Alembic has also got, even Alembic stands to gain significantly from there. So both of these are on our buy list, and they are on the, we have reiterated to buy on them.
All right, gentlemen, hold that thought. We just got a couple of seconds left for the markets to actually close. Let me just quickly run our viewers through the way the markets are slated to close today. Extremely flat, Nifty and the Sensex both seeing marginal cuts. You're seeing a 10 to 11 point cut on the Nifty, and the Sensex also slated to close lower by 78 to 80 odd points.